Welcome to Simply Explained Academy. If you're here, you're probably wondering, what is crypto? And that's exactly what we're going to break down today in this video. So, whether you've heard about Bitcoin, Ethereum, or maybe just the word cryptocurrency, we're going to explain it all in simple terms. By the end of this video, you'll have a clear understanding of what crypto is, how it works, and why it's become such a big deal. You don't need to be a tech genius to get it. So let's dive in. Let's start with the basics. What is cryptocurrency? Well, in the simplest terms, cryptocurrency is a digital or virtual form of money that uses something called cryptography to secure transactions and control the creation of new units. Basically, it's money you can't physically hold, like paper bills or coins, but it's stored digitally, usually in a wallet app or on an exchange. Now, I know that sounds pretty complicated, so let's break it down a bit more. To understand crypto, we need to take a step back and look at how money has evolved over time. Money started out as barter, like trading cows for grains, but eventually it became a bit more complicated. So we moved to using physical things like gold and then paper bills and coins. These physical forms of money are called fiat currency. Fiat currency is any government-issued money that isn't backed by a physical commodity like gold or silver. So dollars, euros, and pounds are all fiat money. But as the world grew more connected, especially with the rise of the internet, people started needing a new kind of money, something digital that wasn't tied to a bank or a government. And that's where cryptocurrency comes in. Now let's talk about how crypto works. To understand how this digital money works, we need to know about two main things: blockchain and decentralization. First, let's talk about blockchain, the backbone of crypto. The thing that makes cryptocurrency different from regular money is blockchain technology. Think of blockchain as a giant digital record book that keeps track of all transactions. But unlike a bank ledger that's stored in one place, this one is distributed across thousands, sometimes millions of computers worldwide. So no single person or organization controls it. When you make a transaction with cryptocurrency, like sending Bitcoin to a friend, that transaction gets recorded on the blockchain. It's like writing down every step in a public notebook so everyone can see it. But don't worry, your personal details are safe. The system uses codes and numbers instead of your name. This process is incredibly secure and transparent. Each new transaction is added to the blockchain in blocks. Once a block is filled with transactions, it's linked to the previous block, creating a chain. Hence, the term blockchain. Now, the next thing that makes crypto so unique is that it's decentralized. But what does that mean? Well, traditional money and banks are controlled by central authorities like governments or financial institutions. But cryptocurrency is different because it operates without a middleman. Instead of banks, peer-to-peer networks of computers verify the transactions. This decentralization is important because it removes the need for a trusted third party, meaning no banks or governments need to be involved. This is why some people see crypto as a way to take control of their own money and avoid the influence of traditional financial systems. So now you understand the basics of how crypto works, let's talk about a few of the most popular cryptocurrencies. First up, we have Bitcoin, the original cryptocurrency. It was created back in 2009 by an unknown person or group of people using the name Satoshi Nakamoto. Bitcoin was designed to be a peer-to-peer digital currency that operates outside the control of governments and banks. Since then, Bitcoin has become the most valuable cryptocurrency in the world. It's often referred to as digital gold because, like gold, it's limited in supply. There will only ever be 21 million Bitcoin, making it scarce and valuable. Next, we have Ethereum, which is not just a cryptocurrency, but also a platform for building decentralized applications, also known as dApps. Ethereum allows developers to create smart contracts. These are self-executing contracts with the terms of the agreement written directly into the code. Ethereum is the second most popular cryptocurrency after Bitcoin and has become a go-to for developers looking to create blockchain-based applications. There are thousands of other cryptocurrencies out there, but a few more worth mentioning are Litecoin, Ripple, and Cardano. Each of these cryptocurrencies has different features and technology behind them. However, the idea is pretty much the same. They're digital currencies that use blockchain technology to function. Now that we know what crypto is and how it works, you might be wondering, why do people use it? Well, there are a few reasons. First up, decentralization and control. As I mentioned earlier, one of the main attractions of crypto is that it's decentralized. This means you don't need a bank to send or receive money. For some people, this offers more freedom and control over their own finances. They don't have to worry about bank fees or regulations, which can be limiting in certain countries. Then there's privacy and security. Crypto transactions can be more private than traditional ones. Since transactions are encrypted, it's much harder for hackers or bad actors to tamper with the information. Also, crypto is harder to track compared to traditional financial systems, making it appealing for people who value privacy. People also use crypto because transaction fees are lower. If you've ever had to transfer money internationally, you know how expensive it can be. Banks and payment services often charge high fees for foreign transactions. With crypto, especially Bitcoin or Ethereum, the transaction fees can be much lower, making it a more affordable way to send money across borders. And last but not least, investment and speculation. A lot of people are drawn to crypto because of the potential for high returns. The value of cryptocurrencies can be very volatile, and some people have made a lot of money by buying low and selling high. But of course, this also means that there's a lot of risk involved. Now, if you're interested in getting your hands on some cryptocurrency, you might be wondering, how do you buy it? The most common way to buy crypto is through crypto exchanges. These are platforms where you can buy, sell, and trade cryptocurrencies. Some of the most popular exchanges include Coinbase, Binance, and Kraken. You can sign up, link your bank account, and buy your crypto with just a few clicks. Once you've bought your crypto, you'll need a wallet to store it in. There are two main types of wallets: hot wallets, which are online, and cold wallets, which are offline. Cold wallets are considered safer because they're not connected to the internet, making them less vulnerable to hacks. If you're not into using exchanges, there are also peer-to-peer platforms where you can buy crypto directly from other people. These platforms usually let you pay through various methods like bank transfers or even cash. Before we wrap things up, it's important to talk about the risks involved with cryptocurrency. As exciting as crypto can be, it's not without its downsides. Crypto prices are extremely volatile. One day, Bitcoin could be worth $60,000, and the next day, it could drop to $40,000. If you're investing in crypto, you need to be prepared for this kind of price fluctuation. While crypto is considered to be more secure than traditional money, there are still risks. If you lose access to your wallet or fall victim to a scam, there's usually no way to get your crypto back. Always be careful about where you store your crypto and who you trust. Cryptocurrency is still a relatively new technology, and governments around the world are figuring out how to regulate it. In some countries, crypto is banned or heavily regulated, so it's important to be aware of the legal landscape in your region. So, there you have it. Cryptocurrency is a digital form of money that operates on a decentralized network using blockchain technology. It offers a lot of benefits like privacy, lower fees, and control over your finances, but it also comes with risks like price volatility and security concerns. If you're thinking about getting into crypto, just remember to do your research, start small, and stay safe. If you enjoyed the video, be sure to like, share, and subscribe. If you want to learn more about crypto, check out this video.